Adjustable rate mortgages, man, should they make a comeback? So that's an interesting topic. With fixed rates sitting higher than buyers would like, some people are looking at ARMs again as a way to lower their monthly house payment. But here's the thing, ARMs today aren't what they used to be. Back in the early 2000s, they were much lower than the fixed rate, which made them more attractive. And now there's just the difference is often minimal. And that's where the conversation really begins. If savings on an ARM isn't that big, is it worth risking that rate adjusting later? And for many buyers, there are better options available, like a temporary buy down, for instance. A 2-1 buy down, for example, can give a meaningful savings up front while still keeping that security of having a fixed rate loan. And the reality is that ARMs can work in certain scenarios, but they're not the magic bullet that people often remember that they were. So before you go all in on an ARM, make sure that you understand how much you're really saving and whether that buy down or other program could get you more benefits and less risk. So should ARMs make a comeback? Maybe in a very specific situation, but I think for most buyers today, there are smarter ways to navigate that higher interest rate without opening the door to uncertainty down the road.